Give me one sec. I'm reading a text from my buddy here. He was in my wedding, asking me, should he buy another call option on this stock because there's a certain amount of money available. So what I'm going to do is I'm going to answer his question in this video. And that way, if I'm going to answer him, I might as well mentor you. But for those who don't know me, let me back up and properly introduce myself. My name is Trader Travis. I am the 2019 U.S. Investing Champion. And currently, I'm in the middle of a case study showing people how to grow a $5,000 account into $50,000 using some of the principles I used to win the U.S. Investing Championship. And so I'm mentoring my closest friends along with you. And I'm about to place a trade here. So let me load them to my account. I literally have 10 minutes before the market closes here. And so what I'm going to do is I have a cheat. I consider a cheat a stock trading software called Market Club. And part of the membership I have gives me a top option scan. Pretty much is a custom proprietary scan that gives me the best stocks that, according to this scan, that are for option trades real quick. So I'll pull up a couple of trades from that particular scan, as well as some other stocks, I saw on YouTube, some popular stocks I saw on YouTube. And kind of so you can see, this is a short abbreviated version of my filtering process, because again, I literally have 10 minutes before the market closes, so I won't have time to cover my full scan. And in addition to showing you this trade, what I want to do is answer my buddy's question as far as how do you split up your money, right? You're going to actually see me, I have a lot of money I could use for trades, but I won't use it. And it's one of my biggest secrets to how I succeed. So I'll show you that, as well as answer the question and teach, what I feel is the safest and most efficient way to grow a small account quickly. Because there's a wrong way to grow an account quickly, and there's a safe way that works every single time. And so I'm going to show you that in this video. All right, so what we're looking at right now, and this is a stock I saw on YouTube. And so this stock is popular right now because this is what people see. It went up from about $4 to $18. And people are like, this stock's taking off without me. This is my ticket to freedom. I want to get rich. And they're jumping into it. I have traders giving trade alerts out on YouTube. I mean, I'm not. I'm like, I've learned a thing or two in my 20 plus years of investing, and I'm passing. Yeah, it tickles my greed gland. Yeah, I think it might be the next Tesla. It gives you those emotional arguments in your head. But I learned something called, hey, let's look at the long-term trend of the stock. And I'll give you a good example of that. Let's see if I can pull up another stock. Yep, I will. That is actually the stock I want to give this example. I grew up, I was abused as a kid, and so I grew up in what my counselors call a dysfunctional environment. And so I grew up around drug addicts, pedophiles, rapists, murderers, you name it, right? So one thing I learned about, I'll use drug addicts and alcoholics, right? They have periods of time where they do great, and that's like this stock. And if you meet them during these periods of time, you think they have it all together. So we've learned, I learned growing up in that environment, not to look at one segment of period. Let me look at a long period of time to see how consistent this person has been. So I now evaluate stocks like that. This stock has been going down. This is a 5-year chart. Yeah, the 3-month chart looks great. But the 5-year chart, it's been going down. It just has a nice period of doing great. It did a nice period down here too. So no, I pass on it. So I look at stocks like TXG. Here's another 5-year chart of TXG. That looks a lot better than this stock right here, FCEL Energy. Right? This one has been consistent. It's not even a 5-year chart. I think this is a newer company, so it's only been available for a couple of years. All right, so now let's move on to this one. NEO is another one I saw on YouTube. People are jumping into, and again, what they see is the most recent chart where it's gone up from 10 to 60. Okay, I'm happy for it. If people make money with it, I'm happy for them. But I also look at the 5-year chart. I'm like, well, for 4 years, it did nothing. I don't want a chart. I don't want a stock like that. I want a stock for 5 years. It's been consistently going up for 5 years. It's more predictable that it will continue. Plug is another one of the most recent YouTube stocks. Stay away from it. Well, I won't tell you to stay away from it. I will tell you, for me as a 20-year veteran in the market, I'm staying away from it. And now I have 6 minutes until the market closes. But I think this is important for you to learn this stuff and learn how a successful investor, someone who survived this, because these YouTube gurus, they come and go. I've seen them in my 20 years. They come and go. They wind up blowing out their account. People like me who survived 20 plus years and are still successful, we've learned a thing or two, how to not blow out your account. And one of the things I do is I avoid popular stocks like this that haven't proven themselves over a consistent long period of time, right? Because yes, this stock like Plug might be jumping up right now, but this kind of move is unsustainable over a long period of time. If the stock moved like that for 5 years, oh, hands down, I would be getting into it. But you go sideways for 5 years and in the last year you jump up, no thanks. Last, I'll compare it to dating, versus the just sad example of me being abused and running around drug addicts, right? Think dating, right? Look at Fast, this stock, as someone you're looking to date. Look at the history of their life, the history of their income, the history of what they've done in their life. Has it progressively moved upward? Has their income progressively moved upward? Has their habits progressively moved upward as far as them becoming a better person over time? Has it been like that, right? Then you can know that this person is going somewhere in life and I want to ride their coattail. That's how I evaluate stocks, sort of like dating. Now, let's go back to the scan here. There are a bunch of stocks. That's how I sift through them. With those thought processes is a full filtering process I teach in something called the Market of Options program. You're getting a snippet of that, how I think through that, how I look at the long-term charts. And then I kind of go through, you can do this on Yahoo Finance. You look at their fundamentals and see if they're making money on a consistent basis year over year. Then if those stocks pass all of that, then I kind of look at, okay, can I afford the options? And now we're going to look at the debit call spread, because Fast is the one I picked because as of this recording now, I have 3 minutes left until the market closes. And this is how I roll. 2 minutes and 51 seconds, actually. Fast is the only one that passed my filtering process. So let me go ahead and pull up that stock real quick, and we'll look at the options. Fast is a $51 stock. I am trading in a $5,000 account. Now let's go back to my buddy's text. Risk parameters. I'm teaching him how to risk a certain amount. So with Fast, wow, I actually can't afford the single options, because with the $5,000 account, the risk parameters I'm following, I want to invest around 200. For this particular stock, I can, except that I would have to come out of the money to $54. So that's about $3 away from where the stock is at. That's a 5% gain that stock would have to make in 100 days. Is that possible? Yes. Is it likely? I don't know. I don't want to kind of bank on that. So I could go with the $52 here for $3, or I could stick with the debit call spreads like I have on these trades right here, that's what I'll do. I'll just keep things consistent, even though I'm very tempted to do a single call option here, so you can kind of see the pros of single call options. So I'll record that in another video. So what I'm going to do is change this from single options to what they call verticals. These are going to be debit call options, and what we're going to do is buy that $52 single call option and then sell the $54.60. And what that does is just make the trade a little bit more affordable. And so it goes from like, all right, let's go back to single options. So 52.1 call option is $3. I could buy that and it will cost $3. But if I come down and sell the option right up under it, because you can buy and sell options, it's like you sell something to help finance a purchase of what you want. So it's going to be $1 here and 2 contracts. Hit confirm and send, and it tells me the max I can lose. I love call options. The max you can lose is your original investment. That's it. So the max I can lose is 200, but the max I can make is 300. Right? So I can more than double my money. All right, let me send this off because I'm going to wind up missing this if it doesn't fill. It's 40 seconds to the market closes. So now 39 seconds to the market closes. So let me adjust this order real quick to see if it fills. So nope, they adjusted the price on me, little punks. So I'm going to say I want to overpay a little bit and pay $1.05. So I'm in the game of cat and mouse. So let me adjust it up now to $1.10. I'll try to go in between the mid and net to show that I'm willing to work with those punks so they can fill my order, and that got filled. Did I like chasing it like that? No, but with 3 seconds left until the market closes, I kind of left myself no choice. That's what I get for waiting until the last minute to place trades. But anyway, what I want to do is come back to answering my buddy's question. He has cash available to invest, and he's asked me, hey, should I, pretty much if he uses this cash, his account will be maxed out. So I'm about to text him and tell him no, because that is not the principles you use to build wealth. You actually have to be conservative to make more money. It's counterintuitive. People think that you have to max out your account, and I'm here to tell you, no, that is the wrong way, right? I have found that investing literally a very small portion of your account, 10 to 20% of your account. Leave the rest in cash for when you lose money, because you will lose money. Leave the rest in cash, and that is how you grow account. Options are leverage. I just showed you I can double my money. Why do I need to invest most of my account? Well, people do that because they want to double their account. They want to get rich quicker. But what people don't realize, and this leads to the most dangerous way of growing an account quickly, is betting your entire account on trades or leveraging your entire account in options. Because the thought process is, because I can double my money with options, I should be able to double my account quickly. Yes, that's true if you're only focused on best case scenario. So the riskiest way to grow your small account is to invest all of your account trying to double it quickly. Because what people don't realize, they don't think worst case scenario. I go into my positions. I just entered a position on fast, and mentally I didn't say this, but I am expecting to lose money. The reason I am pessimistic like that is because it prevents me from risking too much. Because in order to double your account in a year, what people miss is you also can lose all of your money in a year. So if you get an 80 to 90 to 100% return on your entire account, that meant you took the kind of risk that meant you could also lose that much. And when you lose all your money, game over. This is a business. Your capital is your products. Your money in your account is your products. When you have no products to sell, you have no business. When my money is gone, my business has to shut down. So I invest roughly 10 to 20% of my account. Keep 80% as a backup in case we run through hard times in the business, because hard times will come. But with that 20% and the leverage of options, 20% of my account is invested. I just showed you that one trade I could double my account. So let's assume, this is pretending, every one of my positions double. 20% of my account, I double that. So that meant my account grows in 1 year by 20%. If you tell somebody you consistently earn 20% of your money every year, they will consider you an investing god, right? You're one of the top echelon of investors in the world. Then when you tell them you did that by keeping 80% of your money in cash, they will think, no way. But that is how you build wealth. You build wealth by risking $1 to make $5. You don't build wealth by risking $5 to make $5. That is how because you could lose all 5. Game over. No, you find ways to turn $1 into 5. If you have $5, invest $1 to make 5. Keep $4 to the side. So that is how you build wealth. So my answer to him is no. Keep the money in cash. Next, I'm going to walk you through the math. How do you break up your account? What percentages do you allocate to each position and things like that? And then I'll show you the secret to how I personally grow small accounts really quickly. It's not really a secret once you see it, but only the people who implement this really know how powerful this is. All right, so let's do a quick recap before we move on to the safest and most effective way to grow a small trading account. So the risk is to invest your entire account on options. Whether you do it like me, I used to bet my entire account on one trade. Whether you split it up between 10 different trades for diversification or not, it doesn't matter. That's the riskiest way, because the equivalent is like investing all of your money you get from your job. You ever got paid at a job and you get a pay raise and you feel like I'm never getting ahead, I'm still living check to check? That's like investing all of your money out in the options trade. Because what happens is when opportunity presents itself, you can't take advantage of it. So let me give you an example. Remember the real estate crisis of like 2007, 2009, or the market crash of 2020? If people lived check to check when stocks were cheap, did they have money to invest and buy stocks at the cheapest they had been in years? No, they had maxed out their accounts. They were broke and couldn't take advantage of an opportunity. And I've been there. I don't like it. So instead, the safest way I found is following the principles of a billionaire investor. So that's Warren Buffett here. And so if we pull up some articles CNBC have written here on Warren Buffett, they talk about how much he has in cash. And so people can argue various reasons why he has a lot of money in cash. But I started modeling him, and here's 2 things I found out. So I'll share my risk parameters I use for my small $5,000 account here in a second. But I noticed 2 things by following his example. It made me a better investor, right? Who is the best investor? The person who can invest $5,000 and then make a $5,000 profit with that. So they risked losing their entire account, but they got lucky and they doubled it. Okay, that's investor A. Investor B instead has a $5,000 account, but he or she only invests 1,000, but they still make a $5,000 profit. So who's the better investor? The one who can, invest all their account and get lucky and double it, or the one who can take a small amount and then 5 or 6 exit? And so by keeping a lot of money in my cash, like 80-90% of my money in cash in regards to my short-term option trading account, it made me a better investor. It started giving me returns like Buffett earned, and that's why I wound up winning the U.S. Investing Championship. My performance in 2020 in the championship was like the same as 2019. Consistency. I've learned to be consistent like Buffett by risking a tiny amount of my account. Okay, now let's move on. The second thing I learned by investing like Buffett and keeping a lot of money in cash is that when opportunities present themselves, I can take advantage of it. If I have a $5,000 in an account and I only have 1,000 out at any one time, when the market has a correction or it has a crash, I've got $4,000 to go out and do some Buffett buying, to buy really good deals, stocks that may have fell in price, or to catch stocks at their bottom. So when they rocket up, I double or triple my money. So now what I want to do is go to my Excel so I can talk about the risk parameters I follow with the $5,000 account, which I've already talked about. Pretty much I'm only going to keep about 1,000 of it out in the market at any one time. So with the trade I just made on fast, I'm done, right? There may be 20 other opportunities that come across my lap in the next few weeks. I'm not taking advantage of them. I do not break my risk rules, or I try not to. I focus on risk first, profit second. And what I found is one of the secrets to success, again, following the principles of Warren Buffett, is that the way I succeed is by risking less, by avoiding, protecting, and thinking about the risk of losing money first before I think about making money. And so if you're part of Market Club Options, you also get access to another case study, 2 different case studies where I'm going to take $5K and then try to 10x it. So if you're part of Market Club Options, you get access to that. But I just wanted to give you those risk parameters of my $5,000 account, at least until it's like $10,000 or more. Then I'm only going to invest about 5% of my account on each option trade and have no more than 20% of my account out in trades at any one time. That is the formula I'm going to follow, and I'm going to show you how powerful it is over time. Now, what I want to cover next is what we call God contributions, which is the big secret to how I grow accounts quickly. Full disclosure, my mentor taught me this method, but I was so arrogant. I didn't want to listen to him, right? I didn't see how powerful it was until I implemented it. So now I want to come back to my compounding calculator, where I show you the way to grow 5 to 50 is by growing your money by 60% for 5 years. Right? Challenge with that is earning 60% investment return every single year consistently for 5 years is difficult. Even I don't do that. So my mentor showed me a better way to get that growth, something called God contributions, or get out of debt contributions. And so I use my friends, he was in my wedding, I use his example, because he kept thinking he needed to invest in all these different stocks and have all these different strategies to grow an account to get rich. And I was like, no, you can do it with one simple strategy and one simple stock. And he didn't believe me. So I said, how much is your average tax return? And he told me it's like $3,500. I said, okay, how much do you pay in car payments? And then he told me, so I'm going to give it to you. So on average, he had 2 car payments. One was like $450, the other one was like $350. So $800 in total. And then his average tax return is about $3,500 a year. Okay, those combined together is $1,100 a month. When you average them out on a monthly basis, the tax returns plus the car payments, it's $1,100 a month. Now, funny story here. I'm not even talking about credit cards. They go on a lot of trips, and he's like a master chef. He spends probably a lot of money on groceries and things like that. I'm not even touching that because I was like, you can save more money. You're talking to somebody who, sold his car and all his household furniture to get rich. How bad you want it? He was like, he shut that down real quick. He was like, you were single and no kids then, right? He's like, yeah, my wife's not going for that. And I was like, yeah, good point. He shut that down real quick, right? Because I forget that, right? I was like, yeah, I was single with no kids. Like, so you have to do what your significant other is okay doing. But still, what we're doing is redirecting some of that. And that's what my mentor taught me. He taught me to get out of consumer debt. It's insidious. It's investing backwards. And if you have debt and you're struggling financially, I can promise you, solve the debt riddle, get out of debt, your net worth will explode. That's how ours did. So what I taught him how to do is redirect his money. Let's pay off one car payment, two car payments, right? Let's take your tax return and then deposit it in your trading account. Let me show you what the numbers look like. Now, look at this on the screen. $5,000 and him just taking his tax return and his car payments, and instead of making other people rich, so him, $5,000, his car payment plus tax returns, now depositing that in his wealth building account. And instead of earning 60% on investment return, he only earns 24% a year. Very doable as an option trader. Look at the final figure, $120,000. This is what I was showing him. I said, this is why people are struggling. They don't realize the power of God contributions. Do you have $100,000 in your account right now? Right? This is what I was asking him. You know, have you had these car payments for the last 5 years? How long have you been in debt? See, this is what people don't want you to know, the power of your own car payments, debt payments, credit card payments. If you take your debt payments right now, average them all up, credit cards, car payments, excluding mortgage, but all of the other consumer debt, things like that, then put it in a compounding calculator, carry it out 5, 10 years, you will be amazed. And that's exactly what my wife and I did. Now, what we wound up doing is once we saw the power of these God contributions, we went gun-ho. We got out of consumer debt following Dave Ramsey's principles, and then we started living off of one income, completely saving the other person's income. And then we just cut back. We got rid of cable TV. You know, my wife, fortunate enough, she was willing to sacrifice. And here's why. It was a temporary sacrifice for a long-term gain. A temporary sacrifice so we could be millionaires a few years down the line. And for us, that was worth it. Are we willing to we still have not get cable TV after all those many years ago, because we discovered, we don't need it. You know, we don't really need to look at TV. We have Netflix and stuff. But anyway, a lot of people aren't willing to make those sacrifices. So they stay where they're at financially. So when we went gun-ho, we started investing one income, you know, saving, we started living off one income, completely saving the rest. And one day we looked up, we had so much money in our account, we were able to say, deuces, corporate America, we're out. So imagine the day you will be able to say that. And this is how you do it. Take the power of investing plus the power of having your own discipline, commitment, and patience to save more money. And those two combinations will turn you into a millionaire. So you take care, and I'll see you in the next video. Bye-bye.